Hello everyone, it's Trey coming to you from the Harmonic Trading Club, and this time we're going to talk about Microsoft and how a trader can approach it. Remember, I do not provide trade advice or give trade signals or advise traders on what to do. I simply review the markets, break them down technically, and tell you what I see as I'm breaking them down. Um, so Microsoft, a very, very interesting one, and I'm gonna do a quick technical breakdown of it as well as a very quick fundamental breakdown. Stay tuned for both. Okay, like and subscribe to the channel. Share the video if you find value in it. So I'm going to start with I'm going to start with the fundamentals on Microsoft first. A lot of good things to tell you about. Of course, everybody's familiar with Microsoft. Very, very powerful company that's been around for a long time. Remember, we're just going to brush through the fundamentals really clear so we can kind of get a picture, in terms of the probability of trades that we take and the strength of the company, because you want to invest in strong companies. You don't want to invest in companies that are dying, going bankrupt, or anything of that sort. So we know Microsoft's history, even, coming up out of, what was not so good 6 months, but for the year, still 12.5%. 1 year over time from here, basically 12%. 3 years, 22.94, almost 23%. And of course, 5 years, 179% return on your money. 20 years, this is some of the stuff you'll see on the internet. In the last 20 years, if you started trading Microsoft, you have gained 1,467%, 1,400% return on Microsoft. Again, real quick, of course, year over year, its performance is phenomenal. It did have a bad 2022. Somehow, coming out of 2020 and 21, but it had a bad 2022, recovered in 2023, and having a positive 2020-24. These are dividends. Dividends are increasing. The amount that the investors are getting paid out just always increasing, and that's why investors are always going to be interested in companies like Microsoft, biggest software manufacturer in the world. I want to jump over to the seasonality because a lot of people don't understand that these instruments move in seasons. You'll see me talk about this on a lot of different instruments. So I'm just bringing up a 3-year range, 5-year range, 7-year range, 10-year range, and 15-year range. And you can see that from where we are right now, Microsoft will kind of sort of move down. It will catch support. It will go get new highs. It will retrace and correct some, and then it will go get new highs. It will have an outside return or correction and go get new highs. So from where we are right now, you can see a new high coming up, a correction and a new high coming up, a correction and a new high coming up, a correction and a new high coming up as it ebbs and flows. And in this case, what should be bullish momentum. Okay, so overbought, oversold. Just want to talk about something real quick. When I talk about the speed right here, down here on this sort of like a MACD type indicator, you can see that it is bullish. We are, there's not a whole lot, but there's some buying activity. It's kind of like sideways, but there's some buying activity, and I'm going to tell you what the opportunity looks like, at least technically. When we come to the fundamentals, this is a very, very, very good part. Again, we kind of covered that, even though, so where are we on price right now? What's the current price of Microsoft? 417, right? And statistically, even at 470, when it gets to 470, that's average fair market value. The current price of 417 is 12% below. So this is another thing investors are looking for. Are they getting it below value? Okay, that's just basic. Any market, are you getting it at a discount? Are you getting a discount? It should be 470. It's at 417. Okay, low risk of bankruptcy. Okay, with the Almond Z-score 9.117. And of course, just overall, for anybody wondering, this company is resilient. It is effectively managing its capital to foster growth, and it rewards its investors, as I showed you, dramatically. Okay, and then last but not least, political. Just looking at some big political figures. There are some people, because it's sideways, so some people think that it's neutral, but I'm going to show you my opinion on it. You do have a couple of people who are who basically either sold their shares or are short Microsoft. I wouldn't be. This guy William Keating is long. He basically came in around November 1st, October 30th. So basically 20 days ago. Put some money up on it. I can kind of trust him. But my only problem with him is that he doesn't have a lot of money. He's only in the 100,000, so he's got 600,000 in the market. William Keating is a Democrat, so that was the political button that I hit to jump over to that. But you can see he likes tech stocks. He bought Amazon. He bought Alphabet. Qualcomm, Microsoft, of course. So he likes tech stocks. T-Mobile again. So I'm surprised he's short on Verizon. Maybe I'll have a video for Verizon later, but that's just an example of what some things might look like fundamentally. And of course, you guys saw me talk about Marjorie Taylor Greene and the AMD video that I shot earlier, 2.6 million. And of course, she just went pretty much bullish on anything tech, anything just that just involves like large growing companies. She just basically went nuts and just dumped a little bit more than $2.5 million into the market total in the market. She's in 236 positions, so I can kind of like trust advice like her wherever she's getting her advice from. I hope it works, and I think it can kind of be trustworthy because she's very aggressive. Okay, so just that part. So let me come off of those and then just come back to where we're basically done with the fundamentals. Okay, so you guys kind of got the fundamental picture. Now over to the charts. Microsoft. So I don't want to start there. I want to start current day because people actually want to know, hey, what's going on? What's at stake? What can I do? Is a trade possible? And that's where I come in at, because I'm basically my niche is identifying trade opportunities. I just want to talk about a couple of things. The thing is moving. Pre-market had closed at 417. But pre-market is 418.89, so I already gained $1 pre-market while the market is closed. Let's try to talk about why and what the opportunity really looks like. Okay, and this is going to be brought to you by how can I put it? It's one of my favorite techniques. I'll talk about this here. I'm going to write it down. It's a 2618 technique. So no advanced pattern this time, unfortunately. 2618 technique. Okay, so no advanced pattern this time, no bat, no Gartley, no cipher, no butterfly, but this one is just as powerful, and this will feature A to B is equal to CD though, right? It will feature this as well. So two trading techniques being put on display here. So one right here, what we're talking about. And now I'm gonna work my way back and give you guys an overall overview technically on just a long-term projection. So just looking quickly, identifying right here, basically a very clean double bottom. You want, when you're trading, you want your double bottom to be, you want it to be clean. You want it to have that V space in the middle. And you want the lowest low, okay, by definition of a double bottom, okay? The lowest low must meet the lowest close, but cannot close beyond it. So this is a perfect double bottom. And this is what's bringing the action, which is going to take us through the whole entire trade opportunity. Double bottom, lowest low, this is the lowest low, must meet the lowest close, okay, but cannot close. This is a close candle. In this case, it will be red beyond it, okay? So the lowest low, that's this guy here, must meet the lowest close, but cannot close beyond it. So I just wanted to take the time to break down actually what a double bottom is for those that don't know, or for those who think they know. And you really want to have this clean V shape in the middle. You want to have that. This is what's letting you know, hey, I got a really, really good, clean, solid double top or double bottom. In this case, a double bottom. Okay, so that brings us to the 2 in 2618 technique. Okay, a double top or double bottom. That's where the 2 comes from. Okay, next in this technique. Okay, double bottom. I need to clean up. I need to take some of this off, so I need to write right here. Okay, I'm gonna move these back. Okay, so double bottom followed by a break and close beyond previous structure. Okay, so here's the previous structure, right? Here's the previous structure with the basically with the double bottom. Why is that not clicking on? Here's the previous structure, right? So double bottom followed by a break and close beyond previous structure, which is up here. Here's the break and close beyond previous structure. Now people might be wondering, well, why aren't you concerned about this part, Trey? And I'm going to show you why, because this is not the part that reacted the way that the trade reacts. Okay, so I'm not worried about that part, and it's really going to be to the height of it. This wasn't the height. This had a correction, and then we got to where we wanted to get. So it's basically from this part of the double bottom, the right shoulder, basically to the high. Okay, in this technique. Okay, double bottom followed by a break and close beyond previous structure, followed by see if that'll let us write that out. I should bring the font down. Yeah, I'll bring the font down real quick. Double bottom followed by break and close beyond previous structure. And I have to do this because I'm actually teaching the 2618 technique here. Okay, so double bottom followed by break and close beyond previous structure, and then one more is followed by a 618 retracement. Okay, so double bottom followed by break and close beyond previous structure, followed by a 618 retracement. So let's see if we got all that. Let's see if that actually happened. So if I grab the Fibonacci retracement tool and I retrace from the right side shoulder, right to the high, the swing low to swing high, and I bring on the 618 retracement, something beautiful happened. It dealt with it beautifully. This is the kill zone. This is where the trader would have entered at, right? This is where the trader would have entered at. So he probably would have got a little bit nervous, but trust me, he's going to be okay. Things to look for when you're dealing with the combined technical score is, was price oversold? It was absolutely oversold once price got down here, okay? Meaning below 20 on RSI. So double bottom, break and close, 618 retracement. Look for price action to be oversold and look for bullish divergence in this case. And there's bullish divergence across the whole entire thing on the RSI. It's basically showing you boom, boom, it's showing you he's making his way up, which he is. Okay, I'm going to have to clean up a little bit because things are getting too messy and I keep a really clean chart. So the only thing I'm gonna do is put the double bottom back. Okay, and I will put the new structure high back. Okay, double bottom, break and close, and I will put the 618 retracement back because now we're going to go ahead and fill in the rest of the trade opportunity. Okay, and I will just go ahead and say that this was our entry zone, this was our kill zone, and it's working out to perfection basically. So when you have this, by default, your target, and you're gonna have to be a little bit aggressive on some of these. Your target is a retest of the high that he established. Okay, when he got the break and close, establishing a new structure high up here. Okay, so we got a new structure high, outside return, new structure high. So when this happens, because now you have established trend continuation. So this is a way to get involved in trend continuation that you've been missing all these other opportunities, but this 2618 technique allows you to get involved here at the 618 retracement of the whole move with targets retesting the previous high that he established. Okay, so too many people get worried when the market corrects. It does that. The market ebbs and flows. That's what it does. It basically does these new structure high, outside return, new structure high, outside return, new structure high up here somewhere, right? That's the way it goes. That's the way these things move. Okay, so with that being said, you know that you would basically have a TP1 or target one up here. You want to let me make it bigger? back bigger so you guys can see. Okay, so you basically got a TP1 at that level. Okay, so then you would say, where's TP2? Okay, TP2 is an extension of that retracement, right? So if I take the extension tool and I look right here at the right side, the right shoulder of the double bottom, and I go from the swing low to the swing high and back, right? It's usually a 127. It's a 127 extension, right? So that's 127% of that move, right? So this is the target. What do you know? That's why our question mark is right there, because we knew it'd be somewhere in that range. Target 2 is going to be up in this range in the $435 range. Okay, so the traders are the traders that know what they're doing, they are already targeting that. Another thing about that, it is confluent. Okay, the target is confluent with the next level of structure, which is up here. So it's all coming together. So like, yeah, and the market's going to suck itself up to also go retest not only this high, but the net when he breaks this high, he wants to go retest this guy over here. So there's one more part of it. Remember, I also said that there were two things here, right? There were two things at play. There are the 2618 technique, and there is also the A to B is equal to CD pattern. If I can type. All right, remember, so we're combined. We got a lot of stuff going. We got the double bottom, that's points. We got the new structure high. We got the outside return, and also creating another. I didn't even realize that, but also creating another nice little cute double bottom in here, which is helping spring the action that's happening. Okay, so a lot of good stuff going on. We were oversold on RSI. We have bullish diversion, so this is scoring in terms of your combined technical score when you start adding all these things up to give you a lot of points. Last but not least, the last thing that would happen on this here is the A to B is equal to CD pattern, where we would draw from the right shoulder to the high, right? And we would say, okay, that's A. And then we would say that's B, right? Now, in an A to B is equal to CD pattern, if this is A and this is B and this is C, right? So if A to B is equal to CD, if I clone A and B and put him on C, he comes right exactly to where we want to be, right on the money. I mean, in beautiful fashion. If A to B is equal to C and D, then the extension is up here at 435. It doesn't really get too much better than this. I promise you, when you're talking about a technical breakdown like this, A to B is equal to C and D, this is helping you project where price action is going to go. And it also happens to be in line with testing the highs, the next high after this one. So this is a beautiful setup. If the trader is able to get involved in this, he's a few bars late. We're on the 1 hour, it's not too bad. We're going to come out a little bit and still talk about some more. But if the trader were to have gotten in at the 618 retracement, his trade opportunity would look like this. His targets would be up here. You might as well go ahead and test that whole thing. And his stops would be right below the A to B is equal to CD. Or that's for an aggressive stop. Most people would have said, you know what, I'm just putting the stops under that double bottom. And it's going to give you a trade that's basically a 6-to-1. And to be honest with you, it doesn't really get any better than that in terms of risk versus reward. Okay, I'm going to tell you straight up, you can't ask for more than that. Oh, let me just not forget that this would have been D, of course. I just don't want to leave that out. So A to B is equal to CD pattern, entered off the 618 retracement of the A to B leg. Or after the double bottom, got the new structure high, outside return, double bottom here, just basically a retest, and then he's going to be off to the races. Like I said, with a target 1 retesting that first, and then target 2 at the D leg. Beautiful, beautiful write-up. Beautiful, easy technical work. Should work like that. No telling how long it will take. So if we just come out just to kind of like, we are on the 1 hour chart, which is basically what the trade is based off. I'll just go ahead and put this back just so that we still have our double bottom in place just for people that would like to have that if they happen to review this. You're probably not going to see anything like this anywhere on the internet. You're not going to see this type of technical setup. You will see people talking about the 2618 technique. You're not going to see them break it down like this. Okay, so all that being said, that's the opportunity to get in Microsoft and stay in Microsoft up until basically $437. Basically, that's kind of like what the trader would be up against if he has enough balls and the fortitude, patience, and trade psychology to hang in there and stay there and know that when you break it down like this, that's going to happen. Sometimes the market does go against you, but you have to trust what you know and understand technically. Okay, I just wanted to say that and leave that there. Now, I'm going to clear the chart up because we've done all the hard work, and we're going to come back and say, why are we so confident in a long-term bullish action like that? One, because it's you kind of have to with that kind of setup. You can't miss out on setups like that. You just have to take your shot and trust yourself. Two, looking at the larger overall projection of Microsoft. Okay, so you can see the beginning of Microsoft basically here, the structure basically here. I'm just going to do something real cool, and we're just going to talk about something that's even better than we talk. We see the beginning of Microsoft right there. So we can also see that, of course, from that base there was a move up that stopped basically right here. Let me see if I can fatten us up a little bit so we can see a little bit more. Okay, so we can see, where price action, the beginning of Microsoft to that 2021 January. So I think that's around the time of COVID, and then a slight correction. Okay, not a big deal. A slight correction back down to 213. Okay, but that's all right. The thing, what really matters is how much was that correction, because that's going to determine the projection. Okay, I'll say that one more time. Your retracement determines your extension. Okay, so meaning if I retrace from the base of Microsoft to the 2021 point in which he had a slight correction, and I say, how much was that? I ask it, how much? Measure that for me. It happened to be a very, very important, one of the major Fibonacci ratios. 618 being the strongest, 382 probably being the second strongest. It's half of it, but it's the second strongest. So from this base to the high back down, that's 382. That's basically 38%. When you get a 382 retracement, you can expect what is a 1618 extension of the move. Okay, so from the base, measuring from the base to the point of the retracement. Okay, swing low to swing high, and then come back, and then we want the 1618 extension. Remember, you get a 382 retracement, you get a 1618 extension. Okay, meaning this is where price is projected to go next, which is 562. I have no problem with projecting $562 per share for the largest software company in the world with the amount of market share that they have. I think they have about 70% market share, and I think Apple probably has about 30. It might be 65-35, but they're still dominating. Everybody's running Microsoft on their computers. Even Apple computers now are running Microsoft, and just so many things. Azure in the cloud, just so many things. It's Microsoft. Okay, I shouldn't have to say too much about that. The last thing I will say is you see the extended prices up to 562. You also see that price has tried to start pushing up as high as 468. It's been as high as 468. Let me see if I have that right. Okay, 468. It's been as high as 468. But then remember what I told you guys on the smaller time frame about A to B being equal to CD. Remember that? So if this is A and this is B and this is C, and if A to B is equal to C and D, and I clone A and B and put him on C, what do you know? right in line, at at 562. People, you can trust that the big dogs know this. They don't know when it's going to get there. They don't know if it's going to be a year, 2 years, 3 years, 4 years, 5 years, but they know it's going to get there, and they know it without a doubt, and they have no reason to be worried about it because they play the long game. Okay, so even if, from where we are right now, even if we had to go, let's make these green, right? Even if you had to go and do that, and he had to go do another one, and go do another one, and go do another one. However, they know that that's what's going to happen. They know it for sure. And I think they're right. I'm pretty sure they're right because this is how the market moves. So, again, I want to come back to where we were, which was on the 1 hour chart, just to close it out so that people don't forget. You can always replay the video and show you that the trade opportunity is actually right in front of you. I'm not saying how to get to 462. Now, I will say if you get this, because you're actually getting a kind of decent entry, it'd be better if you weren't, if we weren't, you know what I'm saying, a few hours late to the party. It's not that bad. Let's say if we looked at it on a 4 hour, it's not as clean. But even on the 4 hour, you're still late to the party because, again, you've missed on the 4 hour chart, you've missed 8 hours, and that's basically most of yesterday. You missed basically 2 bullish moves yesterday. But if a person would have known that they had this if they would have known that they had this 2618 technique in front of them, right, with this double bottom break and close 600 retracement, they would have been ready to go anyway. So shout out to people who did catch that move, because those traders are going to get this target right here, and they are going to get this target up here. They just are. It just is what it is, and I am a proponent of staying to try to go get all 3 targets. And when I say all 3, I mean this guy too. I'm a proponent of being very aggressive on this. I'm a proponent of saying that if you have the opportunity to get into Microsoft, it'd been great for Trader got him right there, that you just do not leave, that you just stay in it, because quite frankly, there's no reason for you to leave on an instrument like Microsoft. These are the types of trades you want to get in and stay in. Okay, or like I said, or maybe once he gets to 440, you might want to go ahead and take your money and run. But anyway, this is Trey coming to you from the Harmonic Trading Club. I hope you liked this video. I hope it's bringing you some value. I hope you learned some things. We did some A to B is equal to CD pattern in here. We did some Fibonacci retracements. We did some Fibonacci extensions. We taught on the 2618 technique in detail, identifying a true double top or double bottom. No harmonics on this one, but pretty much everything else that you can imagine. Unfortunately for Microsoft, some of the people actually got hurt because the harmonic pattern was actually bearish. It was actually bearish. It was right here. It was right here, here, and here. And it would have been an opportunity for traders to get short and make a killing on Microsoft. So there's some harmonics. We're always going to be able to identify them. No, you don't ever have to worry about that. But if they missed a short, hey, here's an opportunity to get long and get back up there in some of that action. We know where price came from. So I'm getting long-winded, going a little too far with it. I got what I needed to get off my chest. The opportunity is there. It's Trey coming to you live from the Harmonic Trading Club. Like, subscribe, and share the video, and I'll see you on the next one.